All right. It has been a long while since I last updated my stock market trash talk channel. So today is what's the date today? Oh, today is the 2nd of January, 2023, and right now it is 8:32 p.m. in Singapore, and I would like to take this opportunity to do an update. And during this update, I will talk about my portfolio performance in 2022. So without further ado, let's dive in. Okay, before I talk about my portfolio, so let's look at this website which I always go to track the performance of uh, stocks in my watch list. So this website is Xueqiu. I think you can see that they are all in Chinese, but you can actually go online and or you might not even need to go online, and probably you can just do a auto translate and then you can use this website. But for me, I understand Chinese, so this is a very handy and convenient website for me to look at the performance of the stocks in my watch list. And you can actually take a look at the. Okay, so let me just resize the web page. Okay, this is good. So over here, I already ranked the year to date performance from the best to the worst. Okay, in my watch list. Okay, so the bright spots of this year. So probably I should maybe I don't have to crop it and do it on PowerPoint. Let me just do it here. Okay, I think you can see the bright spots. Okay, the bright spots or the better performance stocks, they are Markel. Okay, and next is Naspers, and next is Berkshire Hathaway, which is a flagship conglomerate managed by Warren Buffett. Okay, and over here this is CoStar Group, which is a real estate company in the US. And then over here you have Fischef, and then you have Boeing, and then so on and so forth. And something to note here is the VOO S&P 500 index fund, ETF fund, actually performed quite badly this year. So the year to date is actually minus 18+%. Okay, while relative to the market performance, the orders, anything above the VOO over here, they perform much better, or they perform better than the stock market S&P 500. And you can see, by the way, Markel Corp and Berkshire and this Naspers, these three stocks alone probably take up like 60+% of my portfolio. So in a way, 2022, a lot of people have suffered immense losses. But for me, the fact that I overweight in these four stocks or three stocks, actually I did not get punished that much in terms of losses. Okay, but anyway, my portfolio, I would say my portfolio did not really make a loss this year. Okay, let me be more specific. My US portfolio did not make a loss this year. Okay, the main reason is I overweight in three of these stocks, and these three stocks alone takes up 60+% of my portfolio. And the year-to-date performance for these three stocks, I think you can see they are all positive. So that's the reason why I did not incur a loss. Okay, I would say I'm quite fortunate, and this is the number one thing. Next, and then if you look at some of the worst performance stocks over here, you have Coinbase. So Coinbase is a coin exchange listed in the US. Okay, so if you guys are into crypto industry, and then you must have known that Coinbase, you must have known the story of Coinbase. Okay, and Coinbase had a terrible 2022. It year to date means 2022 year to date performance was minus 86%. Okay, so let's click into Coinbase and look at the performance. Okay, I should go to the weekly chart. Okay, so you can see actually since the peak in November 2021, so it hit $368, okay, per share for Coinbase. And I think at that point in time, Bitcoin should hit 64,000 per Bitcoin, okay, if I'm not wrong. So since then Bitcoin crashed, and what's the Bitcoin price right now? Let's do a check. So Bitcoin, okay, so Bitcoin right now is at close to 17,000 per Bitcoin. So it crashed from the peak of 64,000. Okay, and it happened in November 2021. Yeah, so Coinbase suffered the same fate like Bitcoin, because Coinbase is a crypto exchange. So Coinbase share performance actually tracks the price of Bitcoin very closely, and I'm not an expert in the crypto industry, so I have nothing valuable to add on to it, but I would like to share with you the share price of Coinbase actually crashed 80+%, and if you are still holding on to Coinbase, then you definitely had a disastrous 2022, okay, in terms of share price performance. Okay, next, the next stock I would like to talk about is definitely Tesla. Probably I should start with the ARKK fund first. So ARKK crash, so let's go back to this page. So ARKK, which is a ETF, it's an ETF of almost 100% growth stocks. Okay, they would like to call them growth stocks. Okay, okay, it's just a name. Okay, so if you want to know more about what are growth stocks, I think that the name growth stocks, they are quite misleading, because the metric of being a growth stock is just that the revenue just increase on more than 20% a year, and I find that is a bit misleading. Okay, because you don't call a growth stock a growth stock just by one metric, right? So anything that is that rosy, so you probably want to take a good look, and then think critically for yourself, okay, before you are investing into any stock in the stock market, especially those with a very beautiful and rosy name. Okay, so let's take a look at the ARKK fund. So it crashed 66, so close to 67% year to date last year. Okay, so you look at the weekly chart of ARKK fund managed by Katie Wood. You can see the peak, it hit a peak of $158, okay, Feb 2021, okay, much earlier than the Coinbase, and since then it just went downhill, right? Or rather it fell off a cliff. All right. So right now is actually the lowest point for ARKK fund was actually $29. Okay, and it happened not too long ago, probably a week ago. Okay, but it closed the year of 2022 at $31. Okay, so why I want to talk about ARKK ETF, because so if you follow ARKK fund ETF, I think you know the story behind. So Cathie Wood is still managing this ARKK fund. So Cathie Wood claimed herself to be a growth investor, and she published her stock market materials and analysis free to the public. And if you are interested, you can actually go to the website. You can actually do a Google search of ARKK fund, and then you probably can take a look at her research of her portfolio stocks. And my take on ARKK fund is definitely this fund is managed by a very capable fund manager. In this case, Cathie Wood. That's for sure. However, the price performance of ARKK fund actually reflects a very dark side of this stock market. Okay, so if you invested in ARKK fund in Feb 2021, and right now you are 67% less than then. Okay, so when it comes to a stock market, you have to think critically for yourself. Okay, if you chase after growth stocks, or if you chase after star managers, but in this case I don't agree Cathie Wood is a star manager. She's probably a torch. Torch runs out of battery. Okay, so she's definitely not a star manager in my opinion, but of course you can have your opinion of her. So you have to think for yourself instead of chasing after star managers' performance. Okay, so this is actually a very good example of that. Okay, you should think for yourself, not listening to others, including me. So make your own decision, make your own analysis, and do your work before you invest in any company. All right. So ARKK down 66% last year. So terrible performance. And the other stock I want to talk about is actually Tesla. I'm not so keen to talk about because I don't own Tesla, and Tesla crashed 65%. So quite similar to ARKK performance last year. So actually the other stock I want to talk about actually is Amazon. Okay, if you look at Amazon here, Amazon is here. So Amazon actually crashed close to 50% last year. Okay, so let's go in and talk about Amazon. So let's look at the weekly chart of Amazon. So Amazon actually did a 20-to-1 split. So what it means? It means so this share price is after after the split. Okay, so if you do a calculation, so 20-to-1, so basically you take the share price 84, so you times 20. So actually the pre-split Amazon price at the moment should be 1600. Okay, let's go back to Amazon. Okay, Amazon, let me close this first. ARKK close. Amazon. Okay, so right now, pre-split, okay, Amazon should be at 1600 price. Okay, so why I want to talk about Amazon, okay, the story of Amazon is very interesting over here. Okay, so let me just zoom in over here. So Amazon actually, okay, right now, the cursor is pointing at the March 2020. Okay, so if you can recall, March 2020 was the point where the market crashed to the lowest point because of the pandemic. Okay, so because of the pandemic, somehow Amazon happened to be the main beneficiary of the pandemic, because people were locked, I mean, countries were locked down, so people were home quarantine because of all the lockdown measures. So Amazon being a e-commerce plus a cloud company, so Amazon happened to be the biggest beneficiary of the pandemic. And from then, the March 2020, the onset of the pandemic, actually from there, Amazon just shoot up to a peak of okay, about $180. Okay, so from 80, what's the price then? Okay, so 2020, okay, over here. So the March 2020 low was 81. Okay, so right now is 84. Okay, so in a way, Amazon has come full circle. Okay, so look at the wow right here. Okay, at one point it hit a max of $188. Okay, so from 80 to 188, that is a two times plus, okay, return. And from then it just crashed. Okay, so basically 2020 to 2022, and we are in 2023 already. So basically 3 years, almost 3 years, if you're talking about March of 2023, which is only two months later. So in these 3 years, so Amazon just, okay, have come full circle, back to square one. Okay, so the interesting thing is, even though the share price of Amazon have come full circle back to square one, to the 2020 March low, and my take on Amazon is, I still think Amazon can actually grow its cash flow plus its revenue at maybe not its cash flow, because if you look at Amazon's financial statement, its cash flow is a bit unpredictable, because they are in so many things, and probably this is one of the reasons why Amazon actually underperformed by so much, because they are in so many things, they invest in so many things, and because of the persistent high inflation, actually, and I realized that Amazon actually overextended itself a bit during the pandemic expansion. So right now, Amazon is cutting headcounts and downsizing, streamlining its operation. So this is a very good sign. Okay. So but going forward, okay. By the way, share price performance of a company is about its future earnings. Okay. So from this point on, I really think that Amazon actually can grow its revenue in a healthy double digit, and that's the reason why I want to talk about Amazon. And Amazon is also I have some holdings in Amazon as well, which is not a major holding, but it still constitutes about 3 to 5% of my entire portfolio. Okay, so my take on Amazon is, I think right now is a very good price to go into Amazon. Okay, let's see how Amazon perform in 2023. All right. Okay, so next, probably I want to talk about my portfolio. This is my portfolio in Interactive Brokers. Okay, so you are looking at, actually this is the net asset value, and then actually, by the way, this is a 1 year chart of my portfolio. So it tracks the performance of my portfolio versus the S&P 500. Okay, if you look closely, actually S&P 500 is the green line. Okay, so S&P, you can see S&P actually, yep, we talk about it. S&P 500 actually it was down close to 19%. And then my portfolio, you can see my portfolio is the green line. Okay, so no, not the green line, I mean this line. Okay, the blue line. So my portfolio actually managed to eke out a 1+%, okay, a positive return, okay, for the past 1 year. Okay, so I'm pretty happy about this performance because at least I have a profit for the past year. And not only that, I, in a way, I outperformed the S&P by close to 20%, and that is no small feat to pull off in my honest opinion. Okay, so actually there is one very interesting thing, or there is really only there is one metric about my portfolio which I am so proud of, which is the turnover. Okay, you cannot see the turnover here, I guess. Can you? Okay, let me see. Yes, you cannot see the turnover here. Okay, probably you can. Okay, over here you can see D is deposit, D is deposit. Okay, W is withdrawal. So for the past 1 year, if you look at this, okay, I only have one withdrawal, which is like $400. Okay, to me, $400 compared to the net asset value of my entire portfolio, 130K, which is very insignificant. Okay, and the deposit, you can see the deposit is like $3.600. Okay, so you can actually take a look at the deposit here. So deposit here actually is actually 4,000 plus. Okay, so in a way, I don't do a lot of trading. Okay, for this portfolio. Okay, I don't do a lot of trading. Okay, that's number one. Number two, I don't trade in and out. Okay, so this metric here, okay, I'm not sure if this deposit or withdrawal metric can 100% reflect the fact that I didn't trade a lot. Okay, but I can be super honest with you. I don't trade. Okay, I don't trade in and out. Okay, for this portfolio. Alright, so in a way, this portfolio basically just, it runs by itself. Okay, it sits. I mean, I sleep well every night without worrying too much about this portfolio. This portfolio just runs by itself. Okay, for 2023, I'm going to repeat. Okay, I'm not going to trade in and out, and I don't think I will ever trade in and out anymore. Okay, my philosophy in investing is stay put, buy great companies, stay put, hold them for a long time. Okay, so for the past 1 year, I managed to accomplish this. Okay, I managed to accomplish this by not trading in and out. Okay, so this is one metric I am so proud of myself. Okay, while a lot of others, they might trade in and out, and then they might sell, buy so often. That's not my style. Okay, so my style is, okay, buy and hold for the long term. And of course, different people have different horizon. Okay, my investing horizon is in terms of 5 to 10 years or more. Okay, so yep, so this is the performance of my portfolio for the past 1 year. So it managed to eke out a 1+%. Okay, so very happy to have this positive return despite insignificant or barely single digit return. Okay, so that's about it. That's all I want to talk about.